Mike Agnew, CTA Manager, Maglibra Capital Advisors, home of the Blue Dragon Global Macro Discretionary CTA Program. Welcome to our Econemotions Capital Trading Group weekly update for July 29th, 2019. As you can see here on the left here, this is the Econemotions blog site, econemotions.com. Go there and see what we've written in the past, see our recent video updates will be linked from there. And on the right here, this is capitaltradinggroup.com's front page website here, where you can find more about their futures and brokerage services. This week's title, A Sign of Things to Come. Of course, we got to go over the confidentiality and risk disclosure page here for Maglibra, as it is a CTA, NFA registered CTA advisor. As we talked about last week, Amazon was the big name earnings last Thursday, and we highlighted the 2025 level up on the top side and the 1913 level on the downside. Amazon reported they had their earnings were okay. Their sales were right above expectations of 63.4 billion, expecting 62.4. Operating income though was below expectations, expecting 3.7 billion, came out near 3 billion, which was just up from the prior 2.9. And the AWS sales were also lower than expectations. So the stock got hit a little bit, dropped from 1990 down to roughly 1930, holding there, and then traded down to our 1913 level, a little bit below 1900, and now we're right back there at 1913, right for the FOMC meeting. So how convenient. So we're still going to continue to keep an eye on this 1913 level for the dip below there, and we're going to expect that the bears will be in control there for a little while. So we got to get back above that 1950 area for the bulls to be kind of back into control. So keep an eye on that this week, guys, along with the FOMC meeting on the 31st. Speaking of the FOMC, saw this article as Scott Maynard from Barron's.com. The Fed should hike interest rates, not cut them. Of course, we would tend to agree with them, but we live in a different world here now that's controlled by global central banks, not the U.S.-centric Fed, just focusing on U.S. domestic policy as everybody affects everyone else. So they're all working in coordinated fashion. And with that said, all these lower rates, as we've pointed out before, equals higher risk. And now we're going to get the full-fledged QE forever, as you see on the graphic there on the bottom left. Sign of things to come, number one, the Bank of Jinzhou, 105 billion in assets. Need a little help this week as the government bond repo rates blew out. So who stepped in? The ICBC, China Cinda Asset Management, China Great Wall Asset Management, all taking stakes. As far as the overnight repo rates, you can see here up the WTF is highlighting the big old spike. And we like to usually say hashtag whoops when this happens. But we don't think this is the end of that, so keep an eye out there. Bank of Jinzhou, 105 billion in assets. Not just a drop in the bucket. Sign of things to come, number two. Sticking over there in Asia, the Hong Kongers defy local authorities. Civil unrest and violence, fighting Chinese extradition laws, and police are increasingly impatient. Now this is how you protest. Look at all the umbrellas here. So now we know the Chinese military, I'm not sure, I don't want to quote me here, but they've intervened here in Hong Kong before, but I know they don't like them there to step in. But if it keeps getting out of control, then we may see that sooner than later. So let's take a look at the Hong Kong police fires tear gas from the Guardian News YouTube. Pause it there. You guys see the U.S. flag in the middle of this protest? This is crazy. Alright, so that gives you a little taste of it anyway. Sign of things to come, number three. The French police fire tear gas to disperse protesters from the Paris' Champs-Élysées shortly after President Macron and the traditional Bastille Day military parade festivities. So once again, continued protests and clashes in Paris, and these have been going on for a long time, many months here, as the Gilets jaunes have been protesting for months, with the rising fuel costs and and the continuing discontent with Macron. Although Western media tries to never show any of this, this has been going on for a long, long time. Sign of things to come, number 4. A little bit closer to the domestic U.S. Here in our Commonwealth in Puerto Rico, thousands of protesters take to the streets of San Juan, protesting Governor Rosello and his staff, which are accused of making homophobic, misogynistic, and sexist comments or in text message about their opponents, and even mocking victims of Hurricane Maria. Of course, the people, tens of thousands in the street, they won. They forced Rosello to step down. And that just goes to show you that the power is in the hands of the people when they want it. Sign of things to come, number 5. So what's driving all the civil unrest around the globe here? And we've talked about this quite a bit in the past here. We feel it's wealth inequality. Oxfam put out a report recently. I mean, look at this graphic. The 26 richest people on Earth in 2018 have the same net worth as the poorest half of the world's population, some 3.8 billion people. That's just a crazy stat there. And even the econ professor at UC Berkeley said U.S. wealth concentration seems to have returned to levels not seen since the Roaring '20s. What's he trying to say there? Roaring '20s, all this wealth inequality. What's going to happen again? Where are we? You look here at the global wealth pyramid. You can see over here to the right, the 0.8% of the global population, some 42 million people, control 148 trillion worth of wealth. I mean, that's just crazy. I mean, we all know the all-seeing eyes up here, and the pyramid all tilts to this, and all the rules and regulations funnel here. But eventually, this kind of system leads to civil unrest and what we're seeing around the globe. So, and it's getting worse. So, speaking of getting worse, the U.S. Treasury has to borrow $800 billion over 2 quarters, and obviously the debt ceiling was passed, which is just a formality at this point. We all know it has to rise, and the Treasury net issuance this year is above $1.1 trillion. So you really think interest rates will ever rise if central banks are in control? It can't, because what do you think these interest payments will be here? Who's going to fund this? And we need funding. Look just this week. I mean, we're going to go into, but these debts continue to pile up around the globe. The financial corporates, the governments, even the non-financial corporates. Look at how they're exploding here. Households staying relatively flat, of course, because they don't live by the same rules here. Oh, I keep getting that. That's weird. They don't live by the same rules. So the global central banks have only one tool to use. That's QE. Nothing more. Fighting debt with more debt. No turning back now, though. Without global central bank coordination, asset prices collapse. Hashtag period. Cubono with all this debt, right? Well, how about the U.S. defense budget? The House approves $1.48 trillion for the Pentagon budget. And as this CommonDreams.org article states, unprecedented, wasteful, and obscene. Yeah, we would kind of agree it's a little obscene. Excuse me. But look, we're all for national defense, but we have to start being realistic with some nominal pricing here, don't we? And as the debt rises, the yields are going to go further negative because that's the only way that they can play this game. The global central banks will stop at nothing to keep fiat money from imploding. So 14 trillion negative yielding debt, and what the hell is this negative yielding debt? It doesn't even make any sense. No, of course it doesn't. But when you control the narrative and you control the construct by which our monetary system is built on, you control the utility function of money. And what they say it is, that's what it is. But as you know, lower rates are a sign of higher risk, and this is just leading all rates globally down with it. So even junk is at unprecedented levels. Which is, speaking of unprecedented levels, how about you just pay me to borrow the money? French company Worldline raises 600 million bond with negative 0.96% yield. What does that mean? Look here in the little highlighted red box. Investors are going to pay Worldline for a convertible bond, convertible into shares after 7 years. They're going to pay 1% for it. Of course, they need to get their hands on tangible assets because they're getting killed by inflation otherwise. So who's hoarding all the Benjis? And you can see Helicopter Ben and Janet are up to their old tricks again. With all this debt being loaded and tossed around, it's no wonder the Benjamins have overtaken the U.S. dollar bill. We're actually surprised it actually took this long. So much fiat floating around, and what's it going to equal? Of course, billions in buybacks. Who needs a retail investor when you can self-fulfill prophetically your own demand? Just print at will or swap debt for equity. Buy your shares back, issue options. Buy your shares back, issue options, issue warrants. Do you know that equity buybacks were illegal before 1982? Just ask at AOC. Check her out on Twitter. She was ranting about it earlier this week on Congress. Here's a little item that we thought would move markets, but you know what? Once again, fundamentals, nobody cares. No profit gains in the past 5 years on these major GDP revisions. Operating profits over the last 2 years were lowered by $281 billion, but nobody noticed or cared. The beyond reality, beyond meat is just a byproduct of this fantasy we live in. It continues to advance, and this is this year's star IPO, up 102% from its IPO price. Not bad. No froth here, no risk taking here, right? But hey, this is part. We've talked about Beyond right when they came out, that we suspected that the millennial crowd and those looking for alternatives to meat, they're going to be all into this. I think even Dunkin' Donuts is going to start using some of their products. So, we don't want to say that this is frothy, but we don't know. But it sure has taken off quite a bit. But I'll tell you what, we wouldn't be selling it. But Beyond did have their earnings beat, and they beat it pretty easily, and they smashed expectations. 52.7 million in revenue, which came out at 67.3. But what made them really tumble here, not too bad, but they announced a 3.25 million share secondary offering. So they dropped them a little bit, from 240 down to a little bit above 210. Now we're trading back up there, and we're really not going to get concerned about Beyond Meat here until it gets below 190 here. So keep an eye on it. Some technical charts to consider here at FOMC week. Obviously, the SEP S&P 500 futures are all coiled and ready to go for FOMC. We've talked about this 30, 43, 49 formidable fib extension level, and we think that's our upside key. They may hit it after FOMC. We think there's going to be a battle there, so we're not too sold on a quick break of that, as much as more we're thinking that we're going to see a battle there, and maybe even a rejection from that area. But the bulls will be in control. We get there and trade a little bit above it, but below we're looking at 3,000. We feel that the 3,000 level is a significant marker here for the bears to take over. Moving to the bond side of things, the U.S. 10-year note, it's been a 2-month band here, as you can see. Green highlighted bands here. The FOMC is obviously lead this week, but the August refunding is coming up, so that's going to weigh in on the US 10's futures price here, we think. And no matter what happens with FOMC, it's going to come and go, and then this August refunding is going to be on everyone's mind, and the dealers are going to want to cheapen things up here a little bit, is from what we would expect. The August gold futures are sitting on a key trendline support at 1420, as you can see here, all month long, just touching in and moving up. This is a pretty significant little candle there, rejection from 1450 area. If they break this 1420 with any significance, we're going to look for 1360 as the key underneath. And in Magna Libra and Econemotions, we do some research into off-area topics such as hedge funds and pension funds, and to see what's hiding underneath the hood on our financial markets. And we uncovered the Central States Pension Fund with 385,000 members, and a GAO report that came out last year about them. And they're going to be insolvent in 6 years. We found this crazy because they had 30 billion. But what we also found crazy was that after 2008, they moved to a more passive investing, probably just to save on some fees. But with an 8% discount rate, how do they expect to get that return with moving into intermediate and short duration fixed incomes, especially in a low rate environment? It just doesn't even make any sense. I don't even know what the rationale for that would be. But as you can see here, and now that we're going to move back to ZERP now after 2019 and on, you're going to see this timeline move quickly to the left here as their cash and their assets plummet. And just a little accolade for ourselves here. Our posts are gaining on LinkedIn. We got over 10,000 views on our recent post of Ben Hunt Epsilon Theory, and my little comment that I put up there about the co-op of Bitcoin and Facebook took over for LifeLog back in 2004 and got 10,000 views, so that's good, and its viewers still growing. So if you don't read Ben Hunt and Epsilon Theory, it's a must-read for all of you, and he's one of the best writers that we know in terms of the financial sphere and relating all that facets of life to what we do here in terms of trading and investing. And the link's right here if you want to go ahead and click on there, and it'll take you there to all of his stuff. So we've been reading him for a bunch of years, and we're glad that his stuff here propelled us over 10,000 views. And we've recently asked about how we look at Bitcoin or how we value Bitcoin, and one of the things we've done over the last couple of years is looked at it from a GDP capture. And here, you can see the percentage of GDP capture in terms of transaction base on the nominal value of how much transactions go through the actual Bitcoin network. If we can capture 1% of global GDP to do this, we figure Bitcoin will be worth 43,000 each. Now that's just 1%. Imagine if we can go this way. You can see it just piles up. So as the central banks go in full fiat implosion mode, we know these alternatives are going to exist, and we think Bitcoin is going to be a big beneficiary of all of that. So we just want to throw that out there so people can stop asking about and talking to these people that say they're pseudo crypto experts that have only been in the business in the crypto, we've known about it for the last few years. So I want to keep you guys ahead of the game. Okay, cheers. That's it. Till next time. We'll report on the FOMC this week, see how things transpired. In the meantime, go to Econemotions.com, learn a little bit more about our blog there, and you can find more about my Magna Libra CTA program here at magnalibra.com, and of course you can go to capitaltradinggroup.com and find out more about their introducing broker and services. And finally, our tagline, as always, Magna Libra doesn't want to make up the majority of your portfolio, but rather we want to be a significant portion of your alternative investment allocation. Okay, thanks guys, cheers.